Welcome to the first in the series that we're going to call the Entrepreneur's Ultimate Toolkit, presented by VastSolutionsGroup.com. My name's Kenner French. What we're going to be doing over the next number of weeks would be going over specifics for entrepreneurs from idea to grave, meaning from the outset of the entrepreneurial idea all the way to the marketing of it, all the way to the financial element of it, to the taxes of it, and also finally when the entrepreneur would want to leave a legacy and potentially sell the business, and also potentially leave a legacy for his or her heirs. Really what this is this is really the specifics for an entrepreneur. Most of our clients at VastSolutionsGroup.com are entrepreneurs who usually have got a job, and then they've decided to start a company on the side, and then that company has flourished, and now they've come to us because they need some tax mitigation. And we're going to provide some ideas from, again, idea to grave. Here we go. Get a hobby. It can make you rich. Now, what do we say by that? Really what we're talking about is a hobby can save you taxes. Let's say you're a W-2 employee working somewhere. Well, many people dream of turning their passionate pursuit into a money-making venture, creating a successful and profitable business. It's seldom easy, but the federal government offers tax incentives to business owners that could make converting an avocation into a business startup an effective part of your overall tax planning strategy. If you're thinking about turning a hobby into a business, you need to be realistic, very realistic, appraisal of your chance of building a profitable enterprise before you declare yourself a business owner. Because of the tax breaks associated with business ownership, the IRS, Internal Revenue Service, requires filers to follow certain guidelines before claiming on their tax return that their hobby is in fact a business. According to the IRS, the incorrect deduction of hobby expenses accounts for as much as $30 billion per year in unpaid taxes, and therefore taxpayers are cautioned against claiming tax breaks for activities that do not meet the IRS definition of a business. I should also mention, once again, this is Kenner French of VastSolutionsGroup.com. We're going to have a series of 12 of these podcasts, as being the first one. And that's going to really ultimately comprise the Entrepreneur's Ultimate Toolkit, presented by VastSolutionsGroup.com. Fortunately, overcoming these obstacles may not be as difficult as they appear when we're talking about the IRS and their activities as they are researching if it is a company or not. Although the IRS wants to see proof of effort into building an income-generating business, that that you're not just kind of playing around doing what's called the hobby loss rule, meaning making sure that you're really a business and it's just not a hobby that you're getting a deductions for. As long as you're setting up a business, it does not involve a large capital investment. Making a profit may be attainable goal in some years down the road. You can establish a profit motive by taking relatively inexpensive steps to market your products or services, such as advertising online and even listing in the old school yellow pages. Once you have established a business, many of these expenses become tax deductible. The IRS defines an ordinary business expense as one that is common and accepted in your trade or business. Turning your hobby into a business also allows you to offset losses incurred on some transactions against profit earned on others. Even if your main source of income is not the business or from the business, claiming a business expense and its losses can help reduce your overall taxable income. Generally, taxpayers are permitted to deduct ordinary and necessary expenses for conducting a trade or business. Now, what qualifies as an ordinary or necessary? Well, expense will vary according to the business. For example, you may be able to write off entertainment and transportation expenses, provided that they're directly related to your specific business. You may also be able to hire your children. Again, you may be able to hire your children to work for the business, which may help reduce both your family's aggregate income subject to taxation and the effective rate at which that income is taxed. If you have a home office and equipment that are used exclusively and or regularly for your business, you could qualify for deductions for the business portion of the property tax, mortgage, interest, rent, utilities, insurance, depreciation, and home maintenance and repairs. That's a key comment I just made. Again, it's worth saying again, if you have a home office and equipment that are used exclusively and regularly for business, you could qualify for deductions for the business portion of property taxes, mortgage, interest, rent, utilities, insurance, depreciation, and home maintenance and repairs. Depending on the type and scale of your business, you may have to file papers with state and local authorities to register for sales and other business taxes. You may also have to obtain relevant licenses or permits. Now, as a self-employed individual, you will be required to pay estimated income and self-employment income taxes on a quarterly basis. If you have employees or are operating as a partnership, you must obtain an EIN, or what's called an employer identification number, from the IRS. Your accountant should be able to help you in this circumstance. While most businesses that emerge from hobbies operate as sole props or partnerships, you may wish to incorporate the business to form what's called an LLC, or a limited liability company, as time progresses. To demonstrate that you're serious about your business, consider drawing up a formal business plan that outlines how you intend to operate and grow your specific business. Detailed record keeping is essential, both for claiming your deductions and for providing to the IRS that you are truly conducting a business. Set up a separate bank account for the business and apply for a separate credit card and business expense. Attending industry events, subscribing to trade pubs or publications, posting a company website, and advertising on social networking sites can provide evidence of your for-profit business. Now, having a website really helps because you're trying to be out there in marketing. It's not like back in the day when you used to have a storefront. It's a little bit easier to do a website than is a storefront. You don't have to do rent, leases, physical furniture, etc. Now, you can become a blogger, a travel blogger, and if it's for profit, your travels, therefore, are deductible, generally speaking. To be sure, many of the people out there know of someone who's turned a hobby into a huge business. Maybe that could be you, that turns a small little hobby, whatever that is, into the next Google, the next Microsoft, the next Amazon, the next Apple. Turning a hobby into a business, it sure does have its challenges. Be sure to do your homework before declaring yourself a business owner. Most importantly, consult a professional advisor for more information. If you need any help, please www.vastsolutionsgroup.com. Once again, Kenner French. This is the first, as I mentioned, in this series, in a 12-part series of the Entrepreneur's Ultimate Toolkit. It's presented by vastsolutionsgroup.com. If you need help, give us a call, 888-808-8278. Thanks.